The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show with our usual chart of the DAX on a 30-minute chart. As you can see, we've had this sloping downtrend line over the past 6 or 7 days. We have hit it exactly at the 61% retracement last night. That's when we were having our rally in the S&P futures. There is a strong correlation between what the DAX does and what the S&P futures do. I think that's because you have a lot of people in Europe that trade them both. But the key here is that we have retraced quite a bit of that. We have not broken out to the upside, of course, nor have we broken to the downside. So my assumption is we've got 7 days to go until our election, and the whole world is watching, unfortunately. Anyway, we'll see how this all works out here. What I wanted to talk about early this morning is something that we've been talking about for weeks and weeks here, and that is a possible breakout in gold. Folks, last night, silver was the key. Let me put this chart up. We'll take a quick look at it here because you'll notice here that we were wanting to buy silver at 1745, and we got down to 1751. It missed it by about 6 cents. The gold order missed it by $2. We were looking to buy at the 61% retracement, and it could only get down to 0.57. So it just took off. But the key here to watch, especially if you're looking at on a shorter time frame, if you notice how the market had made this pennant up here around the near the $18 per ounce level in silver, and then backed off to a perfect 382 retracement. And then the key is, look what happened when it hit 18. Folks, once it hit $18, there was no resistance there at all. And as you can see, we've jumped, as of this time that we're talking right now, we've jumped $2,000 in a matter of just a few hours here in silver. So this is a valid breakout. Now, I'm not buying the breakout here, but I'm certainly going to be watching, for a 382 pullback to see if, we get one of those. The last time, that's only 40 cents in silver. So that would just bring it right back to the $18 level. So keep an eye on silver. 36 cents happens to be the harmonic number in silver, 18 and 36. So those are things that you want to watch for, 18-cent and 36-cent retracements in silver. But this, to me, is a valid breakout. We've also broken above the level in the gold that we were watching, that we talked about yesterday on the show, because it was, spot on, right at that 382 level. And all we had to do was to get above, let's just put this up here so you can see it. All we had to do was to get above the 1284 level. And of course, we've done that with ease now. And this tells us that we are moving higher. So that's one of the keys to watching these things from this particular level. Now, we're on Thursday, I want to mention we're going to have an astrological day on Thursday. On the first part of the show, we're going to have Shane Smullian on, and then of wolftrader.net. And then in the second half of the show, we will have Norm Winsky from AstroTrend. So that'll be on Thursday. So we'll be watching that, very, very close. So we'll see what's going on. We do have a Fed meeting today. I believe it's a Fed meeting today. I don't think they make any announcements till tomorrow. So it's going to be, and then of course we have the jobs, the employment thing on Friday, which is always a crazy one, as if we needed any more craziness. Folks, we're having some really great volatility here in the currencies, not so much in the stocks, but in the currency we really are. If you recall, on a Monday show we were talking about this position that we put on Friday in the Australian dollar, and if you'll notice here today we've gone up and we've completed this 135 pattern that we've been watching. That completes this trade. That had a little bit more than $1,300 in it. If you were fortunate enough to hold it all the way, if you held it just part of the way, that's okay too. But now we're in this situation where we do have this 135 pattern. It's going to be interesting whether it fulfills itself. But these are just patterns, folks. That's all they are. They're not anything more than that. The next one that we need to chat about here, of course, is the euro. We had the same type of situation in the euro. This one was pretty much spot on. We didn't quite get to the level that we wanted to get, but the pattern and everything was fine. We only got to a 50% retracement in the euro, but it was equal to the move that we had during the 26th to 27th, and now we're all the way up here to the 1.618 expansion at the 110.25 level. So that's telling us that we're probably getting ready to break out in the euro. That's not a surprise because, we were looking at the dollar index as our key here because that's the one that, we think has that really gives you an idea of what's happening with the foreign currency. And as you recall, on last week and again here on yesterday's show, we talked about the fact that we were setting up here with all those ratios at this 99 level, and that was a 78% retracement of the high from last year in November, and it was also a 1.27 expansion of the move from July to August. So this is telling us that we should, have a pretty good correction. And what we're looking for in this correction is to see it to come down somewhere around the 97 level. That's where the breakout occurred, 2 weeks ago, and now we're getting ready to pull back. But this is a really, really important pattern when you have the 1.27 and the 78% retracement coming in right at that level of 98.70. It actually went 29 points higher than that. That's why when you trade the dollar index, you usually should use a 50 pip stop, which is a little more than 3% of the value of the contract, and so that's why you want to keep an eye on that. Anyway, that's what it's looking like now. Is the dollar starting to strengthen? That's also a bias for long gold and long silver, and so far those are all lining up relatively well. As far as the stock market, as you recall yesterday, here again we were talking about the E-mini S&P, the importance of that level of, oh dear, what happened to the chart? I had it, and it's disappeared. Oh, shucks. Well, we'll get it up here in just a minute. Anyway, the importance of that 21.20 yesterday, it got down to 21.19, and we bounced up and we've gone nowhere. We're just sitting in that same zone again. So my assumption is this thing really wants to, work to the downside. So we'll see if the thing is going to do that. But if we get below, as we mentioned before, if we get below the 21.20 level, we're going to be looking at a market that probably wants to go down to the 2070 to 2080 level. Below 2070, you'll be looking at some really serious things that could possibly happen with this. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've had a question about these live hogs that we were looking at a couple weeks ago. We had a situation, but once we went below $44 a pound in hogs, we were below the cost of production, Rich Anderson informed us. And as you can see, we got down to $41. The signal that we were looking at triggered at right around $42. That's where we had the higher bottoms. And we had the gap up the day later, which was really nice. Now, we are in an area now where you want to be looking to sell your hogs and wait for a correction. Now, this market has been quite strong. We actually got up to 48.05 yesterday, and that was the area we were looking at, of course, was right around 47.75. So this is where the area where you should be out of your long December hogs. Now, there's a huge difference between December hogs and the next two contracts that trade, which are February and April. They're already 8 to 10 cents higher than we are in December. So the producers of hogs know that this is a situation that is not going to stay very often, because people are not going to grow hogs if they lose money. That's raise hogs, not grow them. But well, they are growing. But anyway, I just had a little thought about being an old farm boy. Anyway, I don't know if you know this or not, but, hogs are portrayed as being very sloppy and dirty, but in actuality, during the time when they're usually doing their living, they're actually relatively clean. At least that's how I remember it from Southern Indiana days. Anyway, this is the area where you want to be watching to buy hogs get out of your long hogs if you still have them. And of course, if you don't, look for a pullback here over the next 4 or 5 days, which we should get, and we should get a pretty good idea of what hogs are going to do after that time frame. One other one that looks really interesting that people have asked us about, and that is the chart of Amgen. I want to bring this up and show you this. I happen to know someone who happens to be one of the original investors in Amgen, and that is Jim Twentyman's mother. And she's 98 now, still pretty sharp as a tack, but is, the wheels on the bus are starting to come off a little bit, but she's still pretty bright. But anyway, she happens to be in the stock, well over, whenever it started. Her husband knew one of the guys that started it, so they bought it, and they made a pretty good piece of change in this. But if you'll notice, the important part of this here is that you had those 3 drives to a top there. You see those little red dots? That completed at a perfect ABCD correction, as you can see, within, I think, about 30 cents of $177 stock. And, of course, we had some news here the other day where the stock gapped down quite a bit. It's not unusual with these biotech stocks because they are very, very volatile, as they say in a trade. Remember that IBB was the thing that led the market up. That was the one that really made, that's correct, Duffy. They did do very well, and they didn't put a lot of money into it, but they still did pretty well. Folks, you know what? You want to know what one of the best investments over the past 30 years has been? Better than Microsoft, better than Google, better than Amgen. I wonder if anybody could guess what this would be. You know what it is? It was if you owned a membership at the Chicago Mercantile Exchange. During the Cub game on Sunday, we had several friends and students that were at the game, but I was speaking to one the day of the game, just chatting about old times and stuff like this. And when I bought my seat back in 1982, I paid $119,000 for it. That was for a seat on the IMM, the International Monetary Fund, which was a subdivision of the CME. The CME suit cost twice as much, so I bought IMM, which was what I wanted to trade, which was the currencies, the S&P, and the gold and silver. Those things are now the interest that you're going to get paid for the thing. They don't have lease seats anymore like they did, but the interest on that was $300,000 a year, okay? And the stock went to well over 400. In other words, that $119,000 investment, 6.9 large, folks, $6.9 million. That's how much it was. Just really, really amazing. So anyway, yes, I know where Amgen is in Thousand Oaks. That was not very far from where we lived in Westlake Village. So I certainly remember that. Anyway, this gets neither here nor there, but that was one of the better investments that someone could have done over the years. I sold mine several years later. 82 was the bottom of the market on August the 9th, 1982. The S&P hit 103 that day in the cash market. And we started trading the S&P on April the 16th of that year, but there was nobody in the pit because there was nothing happening. The action was in T-bills and gold and the currencies, but later on the S&P, of course, became, very, very big. What I'm trying to mention here is that once this thing started to gain momentum, that's when the price of the seats, started to go crazy. But you don't have to have a seat now. You have all the advantages of these things without any of the problems that you have, of out trades or anything like that. You have instant access. You don't have to worry. I mean, it's just the easiest way to trade. I have to share with you folks. You might get a kick out of this. This is from my good friend, my best friend, Byron Tucker. He was going through some old stuff, and he ran into this old picture from 1985 when we were out hunting for rattlesnakes in California. All this area that you're seeing here, folks, now has now been developed into a huge subdivision. At this time, it's up in the mountains near San Luis Obispo, California. And the secret to good rattlesnake hunting is to find a place where you're never going to see a rattlesnake. We were out there just actually plinking with cans and stuff is what we were doing, just target shooting. And Byron had a new 22, and that's what we were doing. What you don't see is in the background over to the right is we had motorcycles, so we rode our motorcycles up there. This when I was young and foolish. I'm still foolish. I'm just not young anymore. But anyway, when I saw this picture, it really brought back a lot of a lot of memories over the years. Okay, let's move on to another question that someone had about a stock that has come under a great deal of pressure. It's also not in the biotech industry, but it's in the pharmaceutical business. I don't know much about this stock. All I know is, folks, that it's had one heck of a gap down. We gapped down more than 20% in one day, and that means there's something really seriously wrong. We've seen this happen, more than anything else. But that's a key, to looking at it. What I was getting ready to prepare this chart this morning, if you look at the upper left-hand side there in 2015 during the May through July period, you'll see that beautiful 135 pattern where you have cycles coming together. This is the kind you like to see. So we'll see if this is going to work or not. But this stock looks like it wants to get down to about 109, down another 10% or so. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, when we were talking about the seats at the Merck and how much they've gone up, I mentioned they were one of the best. I knew it was better than Microsoft and Google and Facebook and things like that, because I happen to be involved in a couple of those. But the main thing is, someone mentioned in the room that Priceline back in 2001 was $12 a share, and it's now trading at $1,474. per share. So if you got the memo to buy it at 13, now would be the time to take a profit. But that is, you're looking at 100 and about 120 times your original investment. That would definitely be qualified, as something really spectacular. And I think the largest one, as I recall, I believe it was. Now here again, my mind is just going back, reminiscing here, but I believe it was the Sands Hotel Casino, as I recall, was trading for pennies, and it went to $88 or something like that. So there are some out there that are absolutely crazy, but they don't happen very often. If you're fortunate enough to get one, then you're very, very lucky. But nothing beats having good health and good family, folks. Those are the key things that make you happy. Money don't make you happy. You see these bumper stickers that says the difference between the men and boys is the price of their toys, or the man that dies with the most toys wins. That's baloney, because my old grandma used to say, if you come to your final destination and you have 2 or 3 people besides your family there to say goodbye to you, you're a lucky person. So that's the main thing that you want to keep in mind. Okay, let's move on. We're talking about Treasury bonds now, because we have a situation where the Fed's in here today. I think they're going to raise rates. What else do we need to make the election better than the raising of the rates? This would be something that no one's expecting, but they're not expecting anything anymore. So the market has already raised the rates, folks. Look at the Treasury bond chart. Rates have been going up. Bonds have been going down, and that's what's been happening. Now, you don't see too much of it in the news. You're still seeing 30-year mortgages at 3.5 and stuff, but those are very rare. But the rates are going higher. There's no question about it. The question is, when is that rate increase going to come? And when it does, what will happen. You're going to be looking at the situation where the bonds are probably going to rally like crazy. We're very close to a 61% retracement down here at around 60 and change, as you can see from this chart that I just posted in the Treasury bonds. And I think we're just getting ready to break 6,100, so we're not very far away from that. So this is going to be interesting what the Fed really does here, because the market is already telegraphing that's what's going on. If you remember, in 2007, Ben Bernanke spoke several times about what great shape the economy was in, and that was in late September, early October of 2007, and that was the high of the market. So just because someone says something, including me or anybody else, you have to take responsibility and prove to yourself that this is what you really want to get involved in, whether it's the long side or the short side. But frankly, I'll be looking to be a buyer of bonds down there at around 60, about another handle or so from where we are right now, because that's going to be a very interesting 61% retracement. And we also have a couple other patterns that are lining up, but it's not there yet. So you have to wait until we get to that level. And I think you'll be able to see this pattern. Maybe tomorrow we'll take a look at it and see how that's going to hold up. Now, I wanted to go over, we've had a request for a couple of stocks. And one of the ones I wanted to bring to your attention here, we talked about yesterday, was Google. As you can see here, we do have some things that tell you that Google could be in an area of a major top up in here. We have a double top. We have a couple of major expansions, the 1.27 from 10 months ago, the 1.618 butterfly expansion from August. So, and then you also have the double top pattern that is there also. But any move, of course, above 820 would tell you that all these patterns have failed, and we're going to go a lot higher. Now, we've had a request to talk, before we get to some of these other stocks, to talk just a little bit about the crude oil market, and I believe we are really close, folks. I don't know how close we're going to be, but this is the area where we were talking just the other day at 47. If you remember, when we got to 52, we're very, very close here in the crude oil. If you notice, it has a natural trend line from August through September. If it were equal in cycle, it would come in later this week, usually around Friday is what I would be looking at. But if we got down to that 46 level around Friday, that would be an ideal time and price place, to take a look at. As you can see, it made a perfect ABCD to the upside at when we hit $52 a barrel. You took out the high of the previous week at 51.80 and didn't go anywhere. That was your first clue, and then you've had lower tops all the way down. And so we are getting ready to have some pretty good support now. On a longer term time frame, this is actually a bullish pattern because you are in an uptrend. You have higher tops, and you have higher tops and higher bottoms. So you're in an uptrend. So this is what you want to do, is to try to find a spot, to get long crude oil. I thought at $47 a barrel, it looked pretty interesting today. Whether it's going to stay above that or not, we'll have to be able to wait and see. So let's see how the stock market is opening up. We're still heading down a little bit. We matched the low in the Treasury bonds from yesterday, so that's not too much. The silver and gold are still acting to the upside. So these are things that we want to keep an eye on. I wanted to check one other thing here. Yes, the oil is still holding above this, 17 cents above, so that's not very much. But watch it real closely here, folks, because this is a really nice pattern in the oil. You have a really nice retracement. It's going to equal, if we can get it down to $46 a barrel, it's going to equal the BC swing of the ABCD swing. And that would be another one because you'd have more harmony there. Plus, you'd have a 61% retracement. So those are the ones that I think I would keep an eye on with the crude oil, because that's what looks really interesting over the next day or so. You're correct. You're right in that 46 area, Mr. P. You'll be right in the money. Okay, after we looked at Google, we also wanted to take a look at Nike. This stock has been under a great deal of pressure lately, and we've had a situation now on the shorter term pattern. You might want to take a look at Nike from the long side, because we had a really nice drive to a pattern over the past couple of weeks. Then you had a big move up. So watch Nike on a pullback to around the 51.50 level, because you don't have to risk more than $1 at that point. Now this stock is down a lot from the high. As you recall, it was way up above 100, and it's under a great deal of pressure. And it's easy to understand, is because Mr. Gator's saying that the TBT is working good, since we were talking about it, way back in June. But that's history, as they say in the trade. But anyway, watch if you're looking for something to buy, keep an eye on Nike. It's got a nice pattern there. Very low risk. That's the main thing. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and one of the things that I wanted to talk about is the fact that we do have our good friend Shane Smolian on Thursday, and then also we're going to have on the same day, we're going to have our also good friend, Norm Winsky from Astro Trends, and I'm doing my best to try to get Bill Meridian on either probably Monday. Friday, I'm not going to be able to be on the show. I have a previous engagement that I'm not able to get out of. And I would like to be able to, bring some of this information. Now, we're having a lot of discussion in the internet about the astrology part of this election. I don't want to get into it. All I'm going to say is that the astrologers that I've had on the air says that there's going to be a surprise. And so whether that's going to be the same or not, I don't know. But we'll keep a very, very close eye on it. If we break below the 21.15 level, this is going to really be a breakout to the downside in the S&P. Now, the $64 question is it going to be a valid breakout? In other words, for it to continue to go down from that level, because we've seen this many times where it takes out those lows, but by just a little bit. We're trading at around 21.20 now, I believe. But if we break below that, you can see the pattern that we're looking at here. This is a pattern where you have your that's also a 20-month line, because if you extend it all the way back into the August low, you'd be looking at a 20-month line there also at that 2065 level. So this is probably what we're looking at. And that's not very far away, folks. 50 points in the S&P is equivalent to about 400 Dow points, 400 or 500 Dow points. So it's not going to be unusual to see this. Now, remember, the largest down day that we've had in recent times on a point basis has been 777. That's our biggest down move that we've had. That was in 2008 when the banks were getting ready to fail. It's in October of 1987, we were down 550 in one day, but that was 16%. If we were to drop 16% from where we are right now, you're looking at 2,500 Dow points in one day. Now, that could happen. But if it does, remember, in 1987, that happened to be the best buying opportunity of the 1980s. So watch these, because we're going to try to keep a close eye on this to see if it's going to happen. Someone's asked a question about this breakout in gold and silver. What I happened to miss this. I had my orders in, but they just quite didn't get filled. But the other things we had were doing all right. So what else can you do? Anyway, the way to handle this, as far as the volatility index, I know some of you folks are still in that. I've had several questions this morning about the volatility index. We're going to be up near this 20 level very shortly, it looks like. So my guess is I would be out of it the night before. I think you're going to see increased volatility no matter what. But if you've made really good money in it, you can't even tighten your stop up, because whatever happens on November 8th, it's going to be like Brexit. It's going to be over before people even actually realize it's happening. If you remember, the pound was trading at 150. And the next thing you knew, it was trading at 138. And that wasn't even the low was 119. And that, it's doubled again. So this is going to be some, as the old Chinese curse says, and it's actually not a Chinese curse, that may you live in interesting times. That means basically, I hope everything bad happens to you. So whether it's actually an English saying going back into the times of 14 or 1500s from what I found on Wikipedia. So we'll see what's going on. Remember, folks, what you hear in the news and what you read on the internet is not always as it appears. We've seen this over and over again. I've told you many times about this book, The Experts Speak. It's about 500 pages of people that say things that never, ever happened. And these were some pretty smart people. So you got to keep your eyes wide open and your back to the wall, and make sure if you go to a restaurant, you always sit with your back to the door. No, not the back to the door, your face towards the door. Anyway, just remember that as you go through. All right, someone has a question about Microsoft. Microsoft is gapped up. We hit the 60 level. It's left a whole bunch of gaps up in here. That's one stock that if I had to do anything in, I'd look to buy a 55 put for maybe, say, December. I think it'd be very, very cheap. And, that would be where you'd be filling the gap into one of those areas. So we'll see that. Oh, the name of the book is May the Experts Speak is the name of it. And I don't know who the author is. It's over on my desk here, but I can't reach it because of all the wires. Hold on a second here. Yeah, it's called The Experts Speak. Mike, I'll get that name. Here, it's right here. I can do this. Hold on just a second here. If I don't, shucks. I don't have it here. I've already moved it. I read a lot of it because some of the things are so doggone funny. It's absolutely hilarious. There's a lot of sports stuff in there that's very good. But all you have to do is, it's called The Experts Speak. That's the name of it. I don't have to worry about that, Terry. But it's really, some of the quotes in there are just absolute. One of my favorite was from December 7th, 1941. Vice presidential candidate William Wilkie was at the White House at a breakfast. And he said, "We are not going to go to war with Japan in 10 days, 10 months, or 10 years. And the bombs were dropping as he was talking. So that was one of the experts speaking. And there's a whole bunch of other ones in there. So it's really quite funny. But that's one of my favorites. So you talk about perfect timing. Anyway, that's what usually happens. You can always tell when a politician is not telling you the truth, folks. His lips are moving. Okay, let's move on. The question we have about the VIX index, folks, we're coming into an area we've had no volatility in the stock market, good volatility in foreign exchange, metals, grains, everything else, but there's not been much volatility, and that's the play. I've said many times here at 13, I thought that VIX index was a slam dunk, and it's a lot higher than that right now. So we want to watch it very, very closely. The other thing that we want to keep an eye on is this wheat market, because I think we've got a chance here in wheat. If we can get a nice little Gartley pattern here around the 401 level again, that would be another one that we'd be watching. So we'll see if, in fact, that is going to be the case. So far, our level of 21.19 is held. We were 50 cents higher than the previous one. The bonds are continuing to go lower. We're almost, let me give you the number in the bonds if you have an interest to keep an eye on it. If it's going to be a really good spot. and that's going to be at 61.05. That's about 20 points from where we're trading right now. That's going to be a very, very key number, folks. That 61.05 number. That's going to be a really, really big one to watch from my vantage point of looking at patterns. Remember, that's what we're doing, is we're just looking at patterns. We don't know which ones are going to work. We never know that, but we will keep an eye on these to see if they, in fact, do hold up a little bit, and that's what we'll be watching very, very close. We're up against some pretty stiff resistance here in the euro at the 110.30 level, and that's, it just should be some resistance. That's it. 877-927-6648.
I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I just wanted to end the show by talking a little bit about the stock market. As you remember, we had Bill Meridian on about a month ago. He shared his Jupiter cycle, which is very similar to the Bradley model, except it's more smooth. And as he mentioned, that this has a positive bias. So if we do get a good break here in stocks due to the election or whatever we're looking at in November 8th, which is the next Bradley date, we want to be looking to get long in there. Had a question about the Google. If you entered the Google yesterday, put your stop at break even. That would take you in around 792, 793 area. So you put your stop at break even. I mean, when you're trading a $700 stock, the minimum you have to risk is 3%, which is $20. Now that it's moved in your favor, $9, you can put your stop at break even, and so you can see if it's going to work, and don't worry about it because Dan, don't watch the darn thing, because if you do, you'll get, this thing moves $4 and $5 very, very quickly. So I would just put the stop at break even if you happen to do that, of watching it. Now, you should be completely out of your Australian dollars now. That's hit the objective that we wanted to do. You should be out of the hogs. In fact, I was just nibbling at the short side possibly in hogs, but that's one of the things that you want to keep an eye on. We're going to have some pretty good volatility right after the election on the 9th. If we don't, then we are going to go so much higher in the stock market, it'll probably even scare me. So why it would happen doesn't make any difference. The charts are what we're looking at, and even though they have a bearish tone to them right now, longer term, they might not have this. So we have to watch to see what happens. Believe me, these people that are, playing with our money supply, they can do crazy things. I actually think that the Fed's going to raise rates this week, but that's just because of looking at what's happening with the bonds and the notes. I mean, they've been going down for months. And now we're at an area we're going to get some pretty good support here in these. Watch these bonds. Christmas bonds, 161.05, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.